Forex Daybreak podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, Forex Daybreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 85. Forex pairs in this episode are EURUSD. Slight revision has been made on the wave count and we're trying to find out what will be the direction for EURUSD on the coming days. Dollar yen, we have a trade set up here. We are going to trade the C wave to the downside and expect a continuation of this decline. And pound yen, a trade again here. Yesterday we made 125 pips out of this pair. There's a lot more downside potential here and we are trying to catch that move to the downside. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Alright, let's begin with EURUSD. So we have some upside momentum on EURUSD, price now 109.09. I have made a slight alteration on my wave count. Now with this recent price action I have labeled the structure here as A, B, and now we are forming the C wave. So let's draw it here. This new revised count puts the ECB sharp spike as wave A, and then the decline, which is corrective looking, I have labeled it as wave B. Now we are looking for a 5-wave structure as wave C to complete minus wave 4 correction. And remember that this red line at about 110.94 or 110.9 is the low of the first wave, and this is the absolute limit for this wave count. Waves 4 and 1 cannot overlap. If they overlap, then there's a possibility that we are dealing with a leading diagonal as the first wave of one larger degree, and then we can expect a wave 4 peak to reach all the way up to 112 level. This black line up here, the trend line, is connecting waves 1 and 2 peaks. The start of the wave 1, so 117, where we started this decline, and then 114.94, which is the peak of the second wave. This black line, trend line, is connecting those highs. And if we move beyond 110.9 and cross the low of the first wave and have an overlap between those waves, then we can expect a leading diagonal pattern, and this trend line would be the next resistance level for this upwards move. We can actually put the Fibonacci expansion tool here to see what this gives us. So if we take from the absolute low of the ECB move and then take it here, so you can see that the 100% expansion is just at this trend line that is connecting the two peaks. So perhaps there is a leading diagonal scenario going on here, which would be quite interesting. It is not quite often that we see a leading diagonal on such high degree. So let's see how this develops. No trades on EURUSD at this point. I want to see some structure here. The advance from the low of the B wave around 108 has been quite weak. There is hardly any decent structure visible. This can also be still only a small correction on the way down. The problem is that the decline from the high of this A wave around 110 all the way up to 108 is not very impulsive looking. So let's draw it here. So this structure from the A wave to the B low is not looking very impulsive. But first I would like to see if this ABC scenario is correct and we can expect more upside. I would like to see first a break above the 110 level, and then we can start to see some more structure and then project the or forecast the end of this fourth wave. If there is a strong advance and this upwards momentum continues, we start to approach 110.9 level, then we can perhaps expect this leading diagonal scenario and a move all the way up to 112 levels. So no trading opportunities at the moment, in my opinion, in EURUSD. And let's see how this develops. Wait for confirmation. Neither to the downside. If we get a strong move to the downside, then this can give us a stronger signal that the bears are back in charts and we can expect a lot more downside. But let's see first how this develops. What will be the structure and the direction for this pair. Next we'll see a dollar yen. I have a trade set up here. The structure had been quite unclear. Now I have labeled this recent price action as AB. Now I'm waiting for C wave to the downside. Let's draw it here. Perhaps actually I have labeled ABC, but perhaps this can be labeled as WXY since we have a 3-wave structure as our A wave, now a complex looking B wave. So perhaps we can expect a 3-wave structure out of this C wave as well. Another possibility is that we are dealing with a flat correction. This would make the downside quite limited near the low of the A wave. So if we draw it here, 123.74 is the high of the recent 5-wave structure. Then we have a 3-wave structure for the A wave or W. And then the complex looking overlapping B wave. Now we have a 3-wave structure to the downside, 3-wave structure to the upside, and now we can expect move lower and at least at the low or near the lows of the A wave. So perhaps a 122.1 would be the area of the bottom for this C wave if we are dealing with the flat correction. If we have a WXY or more of a zigzag sharper corrective form, here we can expect a move lower and near this 161.8% Fibonacci expansion level, which is near 121.2 levels. I have a trade set up here which is sell stop order at 122.6, stop loss 123.05, take profit 121.36, so near that 161.8% Fibonacci expansion level. So at least a move lower towards the low of the A wave, 122 levels. And then we can see the structure. If we get into those levels, we can see the structure, and based on that we can expect possibly a move lower or a reversal and the next wave higher. I have a quite high degree top made in this 123.74, so I have a minor wave B as well as minor wave Y waves completed in that top. So based on that wave structure or labeling, we can expect a lot more downside. So this would be only the first ABC or WXY structure, and we can expect more corrective structures after this ABC is formed. But at this point, I'm looking for at least a decline towards 122 levels and perhaps even to 121.4.3 level. All right, next let's see Euro Pound. We have now made new highs. Yesterday was quite strong day for euro and also very weak day for pound. We had a couple of trades yesterday, 2 trades against British pound, on pound dollar, also on pound yen. We got 187 pip profit, so that was a very good day in my opinion. Very strong moves were witnessed in pound. But in euro pound, we have now a 5-way structure out of this C wave. Let's draw it here. So from the low of the B wave near 0.698 level, we can see a 5-wave structure almost completed. Actually, we can make out perhaps first 4 waves of this C wave, of this 5th wave of the C wave, sorry. So price now 0.7267, we can expect maybe near 0.73 levels on this C wave. But after that I'm expecting a reversal and the continuation of the larger downtrend, or at least smaller 3-wave pullback on this pair, and at least 0.716869 level, which is the previous 4th wave low. So since we have a 5-wave structure now formed to the upside, the least we can expect after this is completed is a 3-wave pullback and towards usually at the lower end of the previous 4th wave termination point. So nothing to trade here today, but since we are near an end of a 5-wave structure, we can expect a 3-wave pullback soon. So let's keep an eye on this pair and try to trade or catch that next move down, and then make our judgment based on that if we are in for a larger move to downside or only a corrective pullback. My wave labeling here is long-term bearish. I am expecting a lot more downside. On the other hand, there is also expectation of pound weakness on some pound bears. So this is slightly unclear what is the case here, if we are still going to form a larger wave to upside, or if this is minor wave 2 correction like I have labeled it. Alright, let's see pound yen. Also a trade setup has been made here. Yesterday I traded this pair, or we traded this pair in my signal group. So I think we got 125 pips out of this pair. Yesterday was a good day. I closed my trades near the low end of the yesterday's price action, but now I have a new trade set up. So sell stop at 184, stop loss 184.5, take profit 181.8. So take profit is again near this 100% Fibonacci expansion level. The one reason I closed this trade yesterday was that we stopped just at the trend line which connects the 2 lows of this triangle. So I would like to see a break below this line, so 183.7 perhaps, and this will give us a strong signal that we are out of this triangle formation, because there is always a possibility that we have counted this wrong and we can get one more leg up from this triangle. Now it doesn't seem like that, and I think this triangle is completed, but always there's a chance of some miscalculation or incorrect labeling. So this was the main reason I closed it near the lows, and of course we got more upside on that trade, or on this pair later yesterday. I think we had our stop loss near 185 level, maybe 184.8, so this trade has not stopped if you have still this trade on. But now I have a new trade set up, and I'm looking for more downside out of this pair, I think we are going to see a decline towards the 100% Fibonacci expansion level at least. And like I talked about yesterday, even if this is an ABC structure, we can still expect A wave and C wave to be equal in length. So if this decline from 188.78 all the way down to 184.3 is A wave, now the triangle formation is B wave, we can still expect C wave to be equal, at least equal in length with the A wave. So quite good signal that we can expect a decline near the 181.8 level, which we have made our target on this trade. Okay, that's it for today. Visit the show notes at forexdaybreak.com/85. And let me again remind you that you can get this video analysis, daily trading signals, weekly future trades video, books and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Now go to forexdaybreak.com/basic and sign up today. More trades tomorrow. Happy trading, and I will see you next time. Bye-bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.forexdaybreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.